Okay, let me start the recording and then we can get started on the stream. And see, I did the stream earlier today already, so some of it is going to be a bit like repetitive, right? However, since I took the stream, a lot has changed. So let's go over it again. Okay, so first thing I wanted to do is I want to have a little look at BTC, and then we can start looking at some other coins. I'm gonna stream for like about an hour to an hour and a half, and then we'll see how far we got. Okay, so first of all, last last time I went on stream, what we were talking about is we were talking about a move up, because I remember last time I streamed, I don't know what server it is, could have been something else in here, but who knows. We were talking about a move up, and that move up has since happened. Back then we drew this. I think back when I drew it, it was like this, right? But we got another low. And I essentially said what we want to be looking for is we want to be looking for the shark's completion. Now, the problem with the shark, as we looked at it, is this. We have a very nice 886, right? All of the ratios kind of align. We have an X to B in between a 0.382 and a 0.618. We have an A to C between a 113 and a 1618. So we would want to look at that X to D 0.886. However, sharks are a bit different in the sense that X to B doesn't matter all too much on a shark, right? That is why we look for in-between values on a shark instead of taking either the 0.382 or the 0.618. However, that B to D value, that matters a lot more. So the problem this shark had was that the values were pretty far apart. Sharks start at a minimum of BD 1.618. So taking both those values, taking that 886 right over there and the 1618 right over there, you get quite a wide area. And as you can see, that is why there's kind of a lot of disrespect going on here, right? That is why I talk about being cautious when things like this happen. If your ratios don't properly align, if they're very spread out, then you're essentially just trading individual fibs, which is a lot less confluent than trading a full harmonic. So when we got there, as you can see, we had a nice initial reaction, but that's about it. Currently, we're still sitting in what's it called? We're still sitting in the area, right? There's still a shark, but it's not as confluent as we would like it to be. We're still sitting in the area. However, this is not a harmonic I'm currently considering for plays. What I am considering though is if we drag this up to the 113, we can take that 113 right over there, and we have our next level being the 2.0 right over there. We have this a lot closer than the other one. So this it might be a bit hard to see, right? But this is like I think it's like 60% smaller or something like that. This would essentially be the next area I'm looking at if we get new all-time highs. But before that, let's have a look at our current market structure. As we can see right now, BTC for the past weeks has essentially just been consolidating downwards. Now, I want to stress out that even though price is going down, that doesn't always mean it's bearish. In this case, what we see is this. Every time we make a low, so wait, let me zoom in a little, go to a slightly lower time frame, let's go on to a 12 hour. Every time we make a low, for example, this low, let's take this low as an example, and we get another kind of retest close to it, whenever you get that, there are people that are going to long. And a very common place to put your stop losses is right below the previous wick. So let's say someone longed right over there. They would very likely just place their stop loss below this wick. Now, same thing if they longed over here, right, on these set of candles instead of on these candles, they would likely do the same thing. They would either put it over here or they would put it over here. Same idea. And same idea for shorts as well. Let's say someone shorted right over there. They would likely place their stop losses over there, above the previous high. So when we consider that, these levels because of this system, right? Because this is something that a lot of people do, these levels themselves tend to become important. So when you get movements down, you get it in two types of ways. For example, you get it like this, where you have a level where you know that there are a lot of positions. You have a level where, hey, people that longed in this area likely put their stop loss right over there. You get to it, candle closes far below, which likely means you're going to continue down. There is no reaction to this wick whatsoever. We know that there are likely going to be a lot of longs right in this area. However, when you get there, no reaction whatsoever. That indicates very weak price, and that indicates lower. And as you then saw, we kind of kept consolidating lower. So when we look at this, you don't see that at all. When you look at the current price action, you don't see any of that. We get to that area, we get to that previous wick, we instantly get some buying pressure coming in, you instantly get that buyback right over there. We close above the previous wicks, which is very important, right? Where in this area we close below it, goes above the previous wick, and we instantly get a nice reaction upwards. Then once again, after that, same thing happened. So for that reason, even though this has kind of just been consolidating downwards, this is not necessarily bearish price action. This buyback, followed by a strong move up, now twice in a row, is indicating that there is still a lot of buying pressure. Every time we get into an area that has any kind of liquidity or any important level, you do see buying pressure coming in. So let's look a bit further. Now that we know buying pressure is coming in, right? Even though this is consolidating downwards, so it could still go lower, right? That is absolutely not out of the question. It could go for this wick and then go up again. But even though that's happening, let's look at the other side for a second. What do we see to the shorts that were hypothetically taken right over here? Anyone that shorted over here, stop losses over there, still intact. Anyone that shorted, let's say over here, stop losses over there, still intact. And we can do the same for all of these wicks. None of these levels has been taken out. Now, I am not saying that we're going to go up, because I'll get to why I don't necessarily think we're going to go up in a second. However, something is very important to note, that if we do go up, it is very likely that we're going to get through these levels at least. The earliest level on a higher time frame I would look for a short is this level. If we see some kind of SFP or some kind of reaction here, or potentially this level, right? Because there's two wicks so close to each other. On a higher time frame, this is the first level I would look at for a short, because you have so many highs over here, and all of these highs are still intact. There's still stop losses on top of them. This is the first major level. Now, as I said, that is not necessarily the only short I'm looking at. Something with time frame alignment is that we can just take this idea and say, okay, we still have like confluence for a short technically, right? There are still reasons. So I want to go into a lower time frame and see what that looks like. When we go into a lower time frame, first of all, this is absolutely disgusting price action. This kind of consolidation is absolutely disgusting. This is just like some big whales just T-wrapping into it the entire time. Now, the problem with this, and this is one of the reasons why I was looking short, right? Because I put out a short alert earlier today, is when you get price action like this, all of these longs are still intact, because every time we get close to one of the lows, more buys are coming in. All of these are still intact. This is a very perfect setup for just a massive cascade down. And with a massive cascade down, I don't mean like actually massive, right? Because we're very zoomed in. We're on the 50-minute right now. But this is perfect price action for a move down. On top of that, when we look at this structuring, what we can see is we formed the first high with pretty large wicks to the upside, right? And instantly a reaction to it. Formed that first high, we formed kind of a second high, and still large wicks to the upside, very low closes. We're not closing any candles above the previous wicks. Even if you just take the first candle, no closes above it. Now we went in for another low and we formed another high instantly. This, you might have heard Weatherman talk about this. This is very textbook distributive structure. This is not good. So for that reason, on a lower time frame, I also prefer down. However, considering what we just looked at on a higher time frame, right? Considering this, what we just looked at, we know that that move down would not necessarily have to be an actual bearish move. That doesn't necessarily have to be an entire move down. There's a really good chance, if we do go down, that these types of levels, where kind of that liquidity run ends, right? Where all of these stop losses stacked up over here kind of stop, which would be after this wick, right? Where in this area, we start seeing some support. So if we go down, if we do get a reaction in this area, this is where I would start looking for longs again. This is not an exact level, right? Just widely somewhere in this area. And when we get there, that is when the charts are going to have to tell us where exactly we're going to enter. Because as you may know with harmonics, I can try and draw these, right? I can draw these kind of everywhere. For example, I can draw an uncompleted bat right over here. However, there's still a decent chance that this C point is going to get broken, and then the level would be entirely different. In general, just to give an idea of what level I'm looking at exactly, just for the stream, right? This will be the level. 105k is mainly the level I'm looking at currently. On a lower time frame, this is the level. We can zoom in even further, right? And look at a bat over here as well. We have a similar one over here, which is showing a pretty good reaction. I gave this live on stream this afternoon, but I didn't call it. I didn't take it myself either, so kind of a lucky stream timing. In general, though, this is the level I'm looking at. If we start seeing a rejection here, which I think is very likely, I think this is very bearish structuring, then this level is what I'm going to look at. 105k is my main area of interest at the moment. So far, are there any questions about this? All right. Yeah, it's been a very long time. It's good to be back. Okay. So in general, this is the first area we're going to be looking for longs, right? I posted a short earlier. It got invalidated because our level got hit, where it said like if this level hits, short's invalid. I'm still going to look for it if we get another trigger, but it's going to take a bit more execution, right? So I didn't want to have it. Didn't want to have it active. Okay. So apart from that, there are a few areas of interest that I have marked out. Looking at this as more of a range, we can look at this and see what else do we have. Wait, let me just hide this real quick. What else do we have? We have our value area high right over here. Always an important point in a range, right? It's the simplest way to use a fixed range volume profile. This tool, you just place it on the entire range and you get a few very important levels. So a few important levels, very area high where we're currently bouncing off of, point of control right below the 105k level, and a very area level. These are important levels to keep in mind. So likely when I am going to take that long, right, I'm either going to take it on that bat that I showcased earlier or on the wick right over there. And stop loss is likely going to be right below the point of control. Point of control is your most traded area in the range, so that almost always nets reaction. So it's a very important level. So in general, we already have our targets marked out as well. this would likely be a long I'm going for. The reason being that liquidity level right over here, and our easy targeted liquidity right up there. You like to trade a fully formed harmonics after the D wave or the EC and ABC structure, you trade the D wave. From a harmonic perspective, there is no reason to trade the price leg from C to D. And the reason I say that, I'll showcase it in a second. Because I can very easily show you why you shouldn't be doing that. There are some harmonic traders that are really good with that and make it work. But usually that comes from outer confluence. Usually that comes from them just knowing how to trade the markets. Because harmonics themselves don't actually tell you that. Okay, so essentially, this is likely going to be the long I'm looking for, and I'm either going to do it like this, which was drawn on a slightly zoomed out time frame, or we're going to just play it with the bat right over there. We'll see when we get there. That is very hard to predict, right? Because we didn't even try to predict. We try to just react to what the market does. So let me mark this out first. Just going to put a little arrow on it. It's like that to showcase that it's not necessarily a limit order, but waiting for that wick to showcase a reaction. Okay. Now, with that being done, let me showcase that question. Okay, so there are two main reasons as to why you shouldn't necessarily trade your C to D. So let's draw this, right? Where can I find a very, very large uncompleted harmonic? Yeah, right over here. Okay, let's draw this. So let's draw a very large 5-0. Just like that. For those of you that know this pattern, because some people that might have just started with harmonics and are trying to trade them are like, wait, that doesn't even look like a harmonic. This one right here. It's a bullish 5-0 pattern. This is essentially the other side of a shark. That's also why sharks look so different than the other harmonics. So the first thing, or the first reason as to why you cannot really trade C to D is because you can always, everywhere, draw uncompleted harmonics. That is very easy. There are so many uncompleted harmonics you can draw. You will always have longs and shorts open if you would do that. Harmonics themselves don't tell you to do that because there are simply so many. No matter what time frame you go on, you can always draw uncompleted harmonics. Wait, let me let's see. For example, what do we have over here? Do we have something over here? We have one bad, one all bad, but both just completed. So this, for example, this one just completed. Yeah, I guess it's an anti-shark. Too high for a shark. Yeah, I'm gonna have to zoom out a bit. Okay, I'll just use the what's it called, the shark from earlier as an example. The problem with this area is that this B point is way too high. So this would only coincide with a deep crab or maybe a butterfly didn't put the ratio on it. We got favorite level 2. Yeah, that's the next point I'm gonna get into. But both of those don't work with an HC above 1. So the next one I'll use is this one as an example. Oh, wait. Yeah, I hadn't noticed. After not streaming so long, I've become quite rusty on the charts. So, for example, the shark from earlier. But then also, did this go down to the 302? Just barely, right? Yeah. Close enough. But also this one. Both of these would be entirely valid. So are you going to long or are you going to short? And same question if we would rewind it a little bit and put it right over here. In theory, if you would trade C to D legs, this would be valid. But one, it isn't valid. This isn't how you should trade harmonics. And two, as you can see, it got broken slightly after. Now, that is reason number one. You can get too many of them, so you will always have a setup. You will always have a long, always have a short, etc. And reason number two is going to be a bit more complicated. Reason number two is this. Let's see. I want to kind of find a really good harmonic to showcase this with. What do you have currently? Okay, I'm just going to do another old one because I want to make sure that it really stands out on the chart. Whereas, yeah, that's the right area, right? Yeah, okay. So the second reason, and this looks a bit more complicated, but I do think this explains the actual reasoning a bit better. When you look at harmonics, harmonics consists of a few things. Let's, for example, look at this band. It's a very nice band over in this area. Now, why is this a band, for example? Let me grab a cheat sheet real quick. This is a band. As we can see on the bearish band, X to B is going to be either a 0.32 or a 0.5. In this case, we have a 0.5. A to C has to be in between a 0.32 and an 886. And then B to D has to be in between a 1618 and a 2618. There we put X to D on the 886, and that's when we have a band. Now, if you've ever wondered why there are so many different ratios, that's because of this. For example, this X to this X to B, which is a fib from X to A. We don't use X to B itself for the D point, right? Because that's what we have the 886 for. That is the exact same fib. If I put on my progression one, as you can see, that is the 886 and that is the 0.5. That is the exact same fib pool. So why would X to B even matter? The reason for that is because your X to B point is there to make sure all of the fibs that form in a harmonic are all in the same spot. So I'm gonna like make it a bit more obvious for the example, and I'm gonna make the fib presets empty, right? Except for the ones we're looking for. I'll showcase it like fully after this. So, for example, in this case, we're looking for the 886. We have a bearish band, so X to D should be a 0.886 right over there. For B to D, we were looking at fib levels in between the 1.618 and the 2.618. Now, I can enable all of them if you want to. Long story short, we're very close to the 2.24. If we want to see the other ones as well, here they are. So essentially, we're looking at a 2.24. And the last one, and a lot of people often forget this one. I've talked about it a few times. But there is a trend-based fib from A to B to C. And what do we see with that? If I enable... Do I have an empty one? No, I don't. That sucks. Okay, if I disable these real quick, and I'm not going to disable the IO, it's too much work. Okay, if I disable these, what do we see? All of these fibs are all in the same spot. Now, the reason why I wanted to showcase that to answer your question is this. The reason why harmonics work on their D point is because all of these fibs are in the same spot. The exact same spot, more or less, right? You get a very tight area where, hey, this is where you're going to reject. That is what it's telling you. Now, when we look at A to C, what is our A to C actually? It is a fib from A to B. So it is not necessarily bad to long or short a C point. However, you're only longing or shorting one fib. You're only longing or shorting, in this case, 0.618. It even got front ran slightly, right? That's why the ratio is like this. So you're only trading one fib. And in my opinion, why would you trade one fib when you can trade two fibs and a trend-based fib all at once? So that is the second and I think more important reason as to why you shouldn't necessarily look to long or short C points. it's because you're not actually trading the harmonic. You're only trading that one fib instead of all of these combined. And then there's a bunch of different reasons as well, right? But that would take way too long to explain. So I think this gets the point across well. Okay. Now, with all of that done, Let's Kid is gonna put a question in chat. What tickers do we want to look at? You have any coins you want me to go over? We can just take a look at that and see what's up. Hype is a good one. I haven't looked at Hype in a while. Sol LTC XRP. Hype looks weak. Well, that's a new one. Okay. Let's look at Hype first. Let's see. I think this is the last thing we drew. This honestly just looks like a range. Because these were drawn over in this area, right? I don't know where exactly, but these were drawn in this area. I'm going to keep them on. I'm going to quickly showcase what they're from. Oh, I deleted that. Okay. Well, never mind, I guess. Let me just quickly draw the harmonic then. This is an informal pattern called an anti-cardi. I don't usually talk about informal patterns, but this hype chart is really, really ugly. So this A to C doesn't end up in anything formal. So that's why I use these. So, first of all, hype to me looks like a range. This really, really looks like a range. Let's see. I think it's going to be like 114. No, 1618 exactly. Okay. So this is what it looks like to me. Let's see. I'm going to remove the 114s for what's it called, for clarity. Oh. This is how I look at it. We have a range high, we have a range mid, and we have a range low. And these are kind of the outer bounds, right? This is where a deviation would likely happen. And this is if it kind of overextends. You're going to get a reaction off of these. So, not only that, I'm going to remove this as well because the color is going to kind of clutter up the chart, right? We have some harmonics over here. This is what we're currently using as resistance, and then we have these lower parts that we're using as support. So, very kind of initial analysis. This looks like a rejection. We barely front ran it, like by an extremely small amount, but it counts in my opinion. So it's like, this looks like a reaction. I do think we could get like one more drive up to actually like properly touch this bottom area. But this looks like a rejection. Now, just looking at this chart and just ignoring the names, right? If you would look at this and I would just say, hey, this is your, what's it called? This is your supply zone. This is your demand zone. Very simply put, if you reject here, you likely go over here. If you lose this level, you likely go to this level. So I don't want to complicate it much more than that initially. If you do get a drive up into this, I would look for shorts. If you get a push lower, you could look for this. But as we can see, this level hasn't held all too well in the past, so I'm not too sure if you would. I think this is more reliable. So I would look for longs over in this area. I would look for shorts over in this area. It's kind of the initial thoughts, right? Now, I'll put that in chat, and then I'm going to zoom in a bit. Let's see. This looks like it's still, what do you call it? It's still forming its B point. So when I look at this makes perfect sense, right? The only real option that we have is to actually draw this. But as you can see, We don't get far enough. X to B has to be a minimum of 0.382. So this doesn't actually get far enough. So currently, the problem that I would have here with harmonics is that you don't get... You can't really draw any. This would suffice as a B point, but then we would need a C point. So this doesn't look like it's complete yet. So, in my opinion, unless this just kind of drops down, I think you're going to go for a B point somewhere in this area, go for a C point, and then go lower for the proper move. So I personally wouldn't trade this. I'm not interested in trading this for that reason. It doesn't look complete yet. I think any of these levels would suffice. Let me draw them up real quick and make them a bit easier to see. Any of these levels would suffice, in my opinion. I think any of these is going to get a bounce, and then we're going to get another drop somewhere in this area. Very speculative, but yeah, it doesn't look complete yet. The M shape is still forming, right? So if we would look at it like this, we only have this part right now. There's not much to trade. You can draw some things, like you can draw them. You can draw a shark on this part, and it's going to end somewhere over here. But it's only going to give us the same level so we already have. There's a pattern I was predicting, but I learned today is better to let our monks play it first and trade it from D. Can I put it up on stream? Oh yeah, that's exactly the shark I was talking about. Yeah, nice. That's valid. Yeah, and as I said at the start, right, I overshadowed it a bit by what's called by talking a lot about why you shouldn't do that. As I said at the start, if you have a lot of outer confluences, you still can. So for example, one of the things you drew, so this one. Wait, why sure? Oh, you're gonna put it in the air. Oh, your A point on that bearish. Well, you also drew it up too far. So the black harmonic, right? Which looks like a bearish godly, but with an XCD 113. So it's like an anti-shark. That anti-shark, your A point is not valid. When you draw harmonics, you want to put your XABC, you want to put them on the wicks. I know there are some arguments to putting your B point on the candle close. I personally disagree with that, but there are arguments to be made. So if you prefer that, sure. But for the other harmonics, for sure, you need to put them on the wicks. So this one has to be on the wick, for example. Wait, is that with... did you draw that with a different tool? Did you draw that with this one? No, right? I think the ratios on that black harmonic seem off. I can't get a 6.8. Ah, whatever. Fine. Yeah, but what I wanted to get to, you also have different confluence on your chart, right? So, wait, let me go on to a clean chart. So, for example, a few of the things you have marked out are this order block right over there, which is entirely valid. This is a very nice order block, right? To go into a 4 hour, you have a really good engulfing candle, high volume, strong close, etc. It's a very nice order block. Then there's also, see what else you have marked out. You have a fib right over there. 0.5 to 0.618 is what you take. Entirely valid as well. That's a good fib pool. And last one was... Oh, you ended that too early. Same for the fib pool, right? Fib pools, you need to take them from wick to wick. That's how you take them. Yeah, so you would have 0.236. I personally don't trade 236s, but... Oh. Where did I go? I'll just do it on this one. Have that as well. So, even though I talked a lot about why you shouldn't be long and shorting C points, a setup like this, you have quite a bit of confluence in this area. So if you are someone that thinks, hey, if we're going to tap this order block and this fib together, I think that is a great area to look for a play. So I want to take a long there. Then that makes perfect sense. You don't only need to trade the harmonics, right? There's no reason to do that. I do that, but there's no reason to always do that. So if you want to trade it like that, that makes perfect sense. Just make sure you have other confluences than the harmonic. Because the harmonic isn't necessarily telling you too long, but a harmonic can still help you setting targets, for example. This, I personally for my trades take 0.3 as a max for everything, but the technical way of doing it is 0.05 as a default and a 0.03 for Gartleys and butterflies. I wouldn't trade this, but it is valid. Now, this would be valid for that reason if it hits. So if you do decide to take a long in this area, I would be careful of that 86. I would make sure you're careful of this area. Yo, what's up? So yeah, once again, this is not something I would take, but yeah, it's not a, it looks good. That's the thing. Even though I don't trade C points and harmonics don't tell you to trade C points, if you have a lot of outer confluences and if a lot of other things are telling you, hey, I want to long this level and I think this uncompleted harmonic is there, then that's absolutely valid, of course. There's no reason to not do that. Then. Just make sure you're aware that this thing is telling you to actually short in this area. Soul. Yeah, sure. We can do soul. Ooh. I have a lot marked out. Yeah, I have marked out. Short from over here. We're gonna stop out or TP'd and then stop out a break. Even though long that would have been a good profit. Good enough. Okay. Let's I want to delete everything except for that fan. Because I don't want to redraw that fan. Let me do it like that. Okay. So let's have a look at Soul. First of all, and I think I talked about this quite a bit in the last stream, I think this fan on Soul is very important. Soul has been showing a lot of respect to diagonals this cycle in general, so I want to keep them in mind. Now, there's always a level below this, right? Out of the top of my head is 0.94127. Yeah, okay, that's way too far. Okay, I mean, I'll keep it on there, but way too far. So, in general, it's something to keep in mind that we did lose our diagonal. Last time we lost it, we got a pretty sizable move down. We had an initial rejection here, climbed back above it. We're kind of starting to show disrespect to these. So previously, I would have said there is no way you want to long this until you get to this area. However, as we can see, even though we've been showing a ton of respect to these diagonals this cycle, this is a sign that we're not doing so anymore. This makes it look a lot worse for that. So I'm going to hide these and let's just look at this from a harmonic perspective instead. Now, when we look at this, there are a few patterns that instantly stand out, right? The problem that we have with the first one would be this. If you start drawing like this, we run into the same problem that we had a few charts ago. I forgot what it was. Your initial X to B, oh wait, it's yeah, your initial X to B is gonna be too low. You want it to be at least a 0.32, and you have like a slight bit of tolerance, lenience, right? For example, if you get like 0.37, sure, good enough. Way too far off. So the first pattern that would really stand out isn't valid at all. Now, after that, and this is something that you can also take over if you're trying to learn harmonics, the most obvious M shapes after that, right, all come from this area. If we just take this as one price leg up, that is our first part of kind of the M shapes that we're looking for. So let's take that as a start. We're going to draw our X, we're going to draw our A, and then we want to just look for a valid B point. First one that we would have is this one. Absolutely perfect. 0.5 is completely perfect for a bad. Now, After that, it's actually just aligning the ratios. We have a 0.5. We know that that is going to be a bad. So we place our C point on the highest point after our B point, and we place our D point at the 0.886. It's exactly the same pattern I put onto the screen earlier, right? This one. Essentially, that is what we're looking for. Now, as I said earlier, we lost the diagonal, but we're starting to show a little bit less respect to it. So I would still consider this, especially considering the ratios. So let me draw it out manually for once. It's going to draw a fib from X to A, B to C, and then a trend-based fib from A, B, C. Now we can try and see what's up within that area and actually get an area instead of just one line. I think this is a good one. Yeah, okay. So when we do that, we can say this. We have our 886, 224, and then we have two trend-based fibs kind of sitting around it. Now, something important about bats, I know I don't talk about informal patterns all too much because I know it complicates things. If a bat has an X to B of 0.5, a different pattern comes from it as well. And that is a pattern that looks a lot better. It is called a Leo. So what you see over here is we do have a really nice bat, but the area where the fibs actually align is pretty wide. But when you look one higher, when you look at 0.786, that area looks absolutely perfect because you have three fibs extremely close together, which makes for a very confluent area. So I'm going to mark two of them out. I'm going to mark both the Leo and the bat out. And I'm going to put a little line in the bat as well to indicate that this is where the 886 is, right over there. So wide area for the bat. This makes it a bit less confluent, but considering that it is still very close to support levels and considering that we have some pretty good ratios on us overall, I would still consider it. However, my most confluent area would absolutely be this Leo. Now, with that said, let's look for some other confluences. For example, let's try and see what the range has to give. Take this off the screen. Yeah, so this is actually really nice. This is actually really confluent. That fixed range volume profile just across the entire range gives a very area low. Keep in mind, I mostly look at these lines. A very value area low. That's like a tongue struggle. Right on the same spot as that bat. So honestly, I would consider both these areas for an entry. Now, obviously, we cannot take both of them for an entry. So what I'm going to do is this. I'm going to place my initial entry just as a play. This would likely be a limit order considering the confluences, right? We have a decent bat, and we have the value area low right over there. So this would likely be a limit order. I would place that right over there. And apart from that, and this would be more of a trigger play, this will be harder on the execution, I would place a play right at that Leo. Now, this stop loss would not be set in stone. This would be entirely based on the price action you get. And the reason for that is because we have such confluent areas below it, but if we place our stop loss in the same spot, you would have no risk to reward whatsoever. This would be a good play, or well, it would be likely to work out, but the profit you would make would be extremely small. So in my eyes, this isn't worth taking the risk at all. So for that reason, I would wait for this area to hit. So let's say, yeah, I'm going to put my stops just in that area. Okay, so I would wait for this area to get hit and start seeing signs of a bounce. What do I mean with signs of a bounce? Usually that means candles like these. They have a very large wick down, but then your actual body close, your candle closes very close to where it opened, or even closes above the previous wick. Things like that, or things like exhaustion, or things like what we talked about earlier on BTC, Let me get this. Things like this type of structuring, but then the other way around, right? So what was it? Alt I? Yeah. So like this. Those are signs that we would look for. So in general, I think the best play on Soul, if we get it right, because this is still a long ways gone, but I think the best play on Soul, if we get it, would be along in this area. Now, I would love to get into along over here, but the execution is a lot more difficult. So we would have to wait for signs of rejection. This would likely be a limit order, because this is just a very confluent area overall. I think this is just a set a limit and wait for it to hit. If it doesn't hit, unlucky. If it does, this is likely a very good position. I'm going to put some TPs on the chart as well. This is an estimate based on the 886, right? I'm just pulling them into thin air. These could easily change. If we wick slightly lower, this would change. Or if this would be the place, then it would be like this. So this can change. It's just a rough estimate. This will more or less be what I would look for. Let me remove these real quick. On a lower time frame as well. On a lower time frame, I don't think this necessarily looks really good or bad. On a lower time frame, we're finding some support at that B point. We have lost our point of control. In general, I don't think this necessarily looks really good or bad. A small thing about bats is when you have a bat with an XB of 0.5, and this kind of works for every harmonic, but it works marginally better on bats. When you have a bat with 0.5 X to B, the B point is a very important level. And the reason for that is not only is it obviously going to be a structurally important level, because you have like your high, your low, your high, and then you lose it, make a lower low. But it's also on top of that, the midway point of your previous move. And the midway point, even outside of fibs, is always going to be a very important level. So, thing about bats, especially 0.5 bats, if we lose this level, I would actually look for a short. And I know I just talked about not necessarily longing or shorting C points. This is kind of the exception. If you have an uncompleted harmonic, especially 0.5 X to B bats, and you lose that B point, this now actually gives you a reason to say, okay, it is a lot more likely to go to our D point now. So if we get kind of a lower time frame, breakdown and retest of this would likely be the short I would take. And the reason I wouldn't long it right now, because the same could be said for longs, right? The reason I wouldn't long it is because we have that point of control right here. We're sitting right below a very high time frame point of control. That is not a place to long, because you're going to have a very high time frame resistance right above you. What can be your invalidation on bat patterns? Do you mean X to B, or do you mean a stop loss? From C to D. You usually base it off of structure. So invalidation from C to D is in all cases, it is not necessarily from C to D, right? In this case, it would be from B to D, because especially on bats, you would only take it if you lose the B point. You take it if you lose a B point and you retest it. Much like you would see over here. This looks very ugly on a higher time frame, right? If we go on to a lower time frame, you can see what I mean. So this is kind of what I mean, right? You break down into the level, you get a retest, and then on the candle close below, you would take an entry either on this candle or on this one. Stops, I usually put them right above the previous swing high. risk to reward wasn't the greatest on this one, but it's perfectly fine. You would have likely taken it to be somewhere after this dump, right? Or on a candle close like this one, like a kind of hangman candle. This is usually how we do it. You mark out that B point, wait for a breakdown, wait for a retest, you enter with stops above previous high. So the actual validation would just be based on market structure or on any other level you can get. You could also just say, hey, I think this order block is very important. I'm going to put it right above that instead. You can also do that. That is up to you. I always base that on different things than the harmonic itself. So yeah, this is the second play. I'm going to actually mark both of these out in the same spot. And then both like that. Let's put this one back on. And remove this one because we're not using it. Just like that. This is how we look at Soul. I would look for longs to this area because, well, the B point itself is reason for a long. But considering that we're right below that PUC, is just an incredibly risky place to look for a long. It's just not worth it. Okay, last one. One more coin suggestion. Hard coin, I knew it. Actually, Tao's a good one too. You know what? I'll do two more. Ooh, we did actually get that entry. Nice. This was the last thing I talked about, right? It's this long. Okay. Now, first of all, we kind of have our work marked out for us. So, two things that I talked about last time. First of all, Bartcoin on a very high time frame has unbelievably ugly market structure. Like this chart is incredibly ugly because you cannot place any harmonics in this area. Even if you consider informal patterns, you can barely place anything because this wick is too high and you don't have any B points. This is the best you can get, and this only equates to a few informal patterns. It sucks. This chart sucks to trade on a high time frame. So these lines that you see are a trend-based fib from the lowest point over here to the highest point to the lowest point over here, and a regular fib from all-time high to this low right over here. We're using those as kind of a high time frame reference point, where on areas where both of these are, those are areas that clearly have high time frame importance. And that is also why you see currently that we're bouncing off of this. We have a lower time frame shark right over here, low time frame shark, and right in front of those higher time frame fib levels. So when we're going to look for plays, once again, we're going to look for these areas. The first play I would look for is same thing again. I would try and look for this. And the reason for that is quite simple. When we draw a fib from the highest point of the harmonic to the lowest point of the harmonic, you want to always look for a few things. First of all, I'm going to remove the 214 for a bit. First of all, there are two technical targets usually on a harmonic, being the 0.382 and 0.618, from the highest point of your harmonic to the lowest point that price went. On sharks, that is a bit different. The little pattern that I showcased a bit ago, the 5-0, 5-0s form off of shark. So if you have a valid shark, you will also have a valid 5-0. So let's draw a 5-0. And 5-0 is always complete at exactly that 0.5 level. That is why for sharks, I always just enable the 0.5 bit on the 2Ps. So the reason why I would look for this exact play Potentially just taking it up to here depending on prize action, but both of these will be valid targets. So I'm just going to put it up here because I see a very nice wick over there. What I usually want to look for when we have patterns that have already started reacting is this. Essentially, I'm not going to bore anyone with the details, right? Essentially, what you have with Harmonic, if you get to your entry, so in this case, get that shark right over there, you then go to your TP1, which would be the 0.382 right over there, and go back down to your entry, then the same play is usually valid again. Ideally, you get a sweep of this level as well. You don't always get that, but ideally you do. But in general, the play is still valid. Now, I don't always trade the type 2s because sometimes price is just going to go through, right? It's a bit more risky. You need a bit more confidence to trade that. However, it still works really well. So what I would do is I would wait for this area to get hit again. And I'm going to take this entire box for it. This is where we look for buys. I would likely place my stop loss still over there, just below that wick. And your entry is going to vary a bit, right? The lower the entry you get, the better the risk reward. If you get a sweep like this, that is also going to make the play a lot more confluent. But entering high is going to reduce your risk reward a lot, right? So that is up to you, and do you have the time to execute? How much faith do you have in the setup? That kind of stuff. I would likely take it over here and set alerts for right over here. Just gonna set alerts like that. So that is how I would trade it. I would look for longs over here, set alerts over here. If we start seeing signs of a bounce over here, I would take it early. In general, anything in this area looks fine. And let me enable this one again, because that is where I actually usually take my TP1. Yeah, it might look like that. And yes, I do, but it isn't always the case when you have a lot of harmonics like these, right? Because harmonics don't necessarily tell you where price will go. Harmonics will tell you where price will not go. So harmonics are very good at saying, okay, this is the area with my harmonic. If we show a reaction, then we won't go lower. That is essentially what harmonics tell you. So when you have a setup like this, the harmonic isn't necessarily telling you that you're gonna go to the entry, or it isn't telling you that you're gonna go to TP2. But it is telling you if you get here, it likely will not go lower. And if it doesn't go lower, that means it's likely gonna go higher. So it might look like that. And this time I also agree. I think we're gonna get lower first. But keep in mind that is not always the case. It doesn't always mean that, hey, I see a bunch of uncompleted harmonics on the charts, we're gonna go lower. Because as I showcased earlier, you can draw them literally anyway. You can draw uncompleted harmonics literally everywhere. For example, I can draw one over here. And the reason why I don't, what that rate shows you, can draw one over there. And the reason why I don't is because I don't think the C point is gonna hold. So I see no reason in drawing it. It will make a lot more sense if we actually get over in this area. But you can draw them any way you want. Uncompleted harmonics are really easy to draw. It's waiting for the start of July anyway. Okay, and the last one was Tau. Did I actually post it? Yeah, I did. What do I have over here? Do I have anything? No. Oh, wait. Gotta get the MACD chart. Let's see. Okay, I'm not gonna draw the older harmonics. because I don't, you know what, I'll draw them, but I'm not going to draw them out entirely. What I'm going to do is I'm going to put them on the chart, and just put a little extra AFib on it. Just like that. Okay. So there's a card here. What's called, I talked about trading it quite a bit. Back panel was uncompleted, right? It's still there, the levels are still there. I'm not going to draw that entirely. So let's zoom in a bit. What do we see? In general, this price action is very bad. This is not good price action. As you can see, we had some liquidity buildup, we had important levels made, and we lost those levels and retested them. This doesn't look good. This is very bad. Now, we went down and we went all the way to the 786 again. Now the question is it going to hold? Usually I would say, yeah, this is a very good level. There's a good chance this holds. However, what we see is after we got that reaction, we get a retest, and what happens with that retest is the first wick, and not even the actual like kind of swing high, right? Not even actually, it's not even a swing high, right? But not even a high above it, but literally the first wick, we tap into it, close way below, get one more retest, and a straight move down. This isn't good. This is a sign of weakness. So I don't think that 786 is going to hold. If it does, great, but I don't think so. So let's look at actual harmonics, right? In our more slightly lower time frame. So drawing harmonics in this area is kind of awkward, because you don't really have a swing low to start from. This would be the only actual valid swing low. You can make an argument for this one over here. This, in my opinion, is the best one. So this is where I'm going to start. And when we do that, and we just go past the different points, we get a rather nice 382 over there. It's going to take us down quite a bit, though. I don't think it's going to go that low. It might, so I'm going to mark it out, but I personally don't think we're going there. Now, let's start from this point. We're gonna run into the same problems. Valid, right? 0.55 is the max. I usually take 0.53 as the max for myself, but what is 0.001? Let's see. I wanna draw this one out before actually deciding if I want to take play on it or not. I'm gonna draw X to A, B to C, and a drum bass hip right there. Yeah, so that's what I expected as well. Okay, so as we can see, let me disable this one real quick to make it a bit more clear. This is what I was looking at. We do have a nice area over here. There's actually a really nice bat. However, once again, this 786 area looks a lot better. Same thing as before, right? We have a bat with an X to be 0.5. So the 786 is valid as well. The 786 is a different pattern called a Leo, an informal pattern. Let me disable those flips again and enable these. On top of that, not only is the actual PRZ a lot more confluent, it's also within that 786. So this is actually where I would likely look for a play again. The problem is that we caught it a bit too late. The problem is that we're looking at it now and not, let's say, on Sunday or Monday. So what do we do? On an initial reaction, this would have absolutely been a limit order because you have very high time frame level, you have a rather much lower time frame level, and if you look to the left, we have a little demand zone. We have a very easy area to place a stop loss. This would have been a really good limit order. However, we're not there anymore. We have already reacted off of it once. Going back to that area again, combined with this retest we just talked about, would be a sign of weakness. So I don't want to limit order it again. There's no reason to place another limit. However, much like I talked about on the last chart, if we get a sweep of this level, I'm gonna mark it red. If we get a sweep of this level and a reclaim, or just a sweep that closes above, right? I would still take it. If that happens, I'm just gonna mark out the TPs manually. I would actually take the 0.13 because this chart has shown a lot of weakness already. So I would like to TP earlier. And then take that 382, take that 618. Both this 113 and 236 will be optional TPs. You can take both of these or you can skip both of them. Entirely up to you. I'll mark them out. Both of these are optional. This is likely the play I would look for, but this would only be on a sweep. You would have to manually actually execute this because we've already tapped the area and we've already rejected this area. So I wouldn't enter this on a limit order. Now, the other area has some issues. The main one being your bat is right up in the air, while his 886 is a bit lower. Let's see, we don't got any other patterns on this wall, right? Like my eyes aren't deceiving me. I think we'd have to go higher for that. Wait. Let me try and see. I haven't charted it in a bit, so I assume that because I used to be easily be able to see every pattern manually, right? Just barely. 0.32 is the minimum, but it's very, very, very close, so it's fine. Yeah, it's gonna get you to more or less the same area. Okay. Chart's gonna look a bit chaotic. Let me organize it real quick. And draw this one out manually as well, because honestly, this chart looks very tradable. Yeah, this looks a lot better. I like this one a lot more. Did you go over W? Oh, W was the chart that what's it called? Alberke posted earlier in chat. Haven't done it yet, but honestly, we're going through Fartcoin and Tau a bit faster than I expected, so we can go over W. Yeah, okay. Usually, we would try to look for Deep Guardy as well, but it is going to be the same as that bat we marked out earlier. So I'll just put a little box on it and call it a day. I don't think we're going to get that area, but if we do, we have it marked out. Because in the end, it doesn't matter what you think either, right? Even though I don't think we're going to go there, the market might think otherwise. And that's more important. Yeah, so I think this is a lot better of an area to look for. I think this, you have a nice Gardley. You have that higher time frame 86 right below it. I would like to take this higher actually, because the moment you get close to that, to like the 618 area somewhere there, you get a range of all of these untapped highs. So I would actually take my final to be either up there or up here. So that actually be a really good play. You can even, if you want to play it really safe, you could even play it like this, because your risk reward allows for it. The play on the right is gonna have an obviously slightly higher win rate, but the one on the left is gonna have double the risk reward. So you could literally get stopped out on this 5 times for it to work 1 time. It would still be more profitable. Trade-off you have to consider. Both these will be valid. Okay, let's quickly go over W. Oh, I have promised myself to not trade shitcoins anymore, but I can still chart them. This chart is unbelievably ugly. Looks like a very typical airdrop token. Was that a sweep? Let's see. Oh, what is that? Is that for like TradFi? Or what's that? Oh, I don't get it. Okay, anyway. I think this chart looks a lot better if you look at it from traditional TA than it does from a harmonic perspective. Because you can actually just draw this. I think this looks a lot better. Okay. Let's look at harmonics though. Ah, 707. That sucks. I think I've made that joke every single time I open up this chart and it never gets old because this chart really does look like an L. I'm trying to find anything, but I only see this one. But the problem with this one is that it didn't react at all. I mean, the 1.618 reacted, I guess. It's the beauty with butterflies and its curse. Butterflies make 3 areas. They make a PRZ at the 1272, or well, they make 4 actually. They make one at the 113, at the 1272, at the 141, and the 1618. Which is nice if you get to the 1618, but it sucks before that, because you have so many areas you can trade. Yeah, okay. I'll mark out all of the butterflies. It'll take a second. I think it's... No, the 113 is actually quite a bit above that. I'm not going to mark that out. Okay. So there are 2 sides to this coin, right? The first side to this coin is where you look at a chart like this and say, okay, this coin is completely dead. Which, in all honesty, I promised myself to do because airdrop tokens trade like shit. Like, these tokens suck to trade. However, and that's a big however, if there is any area to take a risk on this asset, if you want to do that, that is a big if, right? I'm not going to do that. I'm not going to trade this. But if there is an area to take the risk, this would be the area. 2 main reasons. First of all, you have a pretty nice 1618 butterfly right over there. That's a pretty nice pattern to have, especially because you're all the way at the end, right? Butterflies are really difficult to trade because they create multiple levels. Like, they create a 1272, 141, and 1618. But when you get to that 1618, this is a nice pattern to trade. Because that is like kind of your last level. So it is really easy to manage your risk in this area. And the second reason is that we are at the bottom of that kind of listing candle. And what tends to happen when you sweep those types of levels is you're going to see if this asset is going to be alive or not. These levels act very similar to all-time lows, where if you do actually get a sweep of that, you do get a sweep of your all-time lows, and you either close above it or you instantly reclaim it. That is essentially going to tell you, okay, price doesn't belong lower. If it doesn't belong lower, it likely belongs higher. So even though I wouldn't trade this personally, if you do like to trade this, and if you do want to, I'm not going to stop you from taking the trade in this area. Because you have very, very easy risk management and a few reasons for upside. It's not like it's completely dead, right? Oh, that is 30%. I would only take it in this area because 30% is quite a bit. But in general, this is like kind of your hard invalidation. If you start closing below this candle, that coin is dead. If you start making new all-time lows and actually accepting below all-time low, this coin is dead. But you haven't, and you didn't. So your invalidation is extremely, extremely small, which makes for great risk reward. So, first of all, I wouldn't trade this, but if you do, I don't blame you. And I'm gonna mark out the TPs, but you should take these with a massive grain of salt, because I'm just gonna mark out the technical targets and call it a day. These will be the technical targets. So as you can see, same kind of story, right? Considering that we would in theory enter on the top of this box, if we get a retest, you have some really, really good risk reward. That is the only argument to actually take it, because I don't think this chart looks good. But if you ever take a risk, this is the area to do so. Because it cannot go lower. If it goes lower, it's going to go to 0. This would actually be my TP1. If you do take it, so gold line, TP1. I would take most of it out over there, because that is already a lot of risk reward for this coin. But these areas would be your next TPs. And you can't hear me. we're listening to me, or well, listening to each other without actually listening to me. It's gonna hear me. That sucks. Okay, well, TLDR of what I said is I said I really dislike how this chart looks. However, if there's ever an area to actually take a risk, this is the area to do so. Because you have very tight invalidation, you have a nice pattern to trade, and you have great risk reward. So even though I wouldn't trade it, if you do, then it makes perfect sense. I'm not going to stop you. This would be the area to take a risk. Okay. Anyway, we dragged it out quite a bit, but this is going to be the stream for today. I did record all of it, so I'm going to make sure the recording is uploaded slightly after the stream ends. Thanks everyone for coming, and let's see if we can get back to the regular weekly streams. I think it should be fine now. All right. Yeah, it's good to be back. And thanks for coming, Lance. All right. I will see everyone next week. See you, lads.